I'm Charlotte McLeod with the Investing News Network, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thank you so much for joining me online today. Great to see you again.
Always a pleasure, Charlotte. Thank you.
Yeah, so we have a lot to talk about today, and where I think we should probably start is with what's going on in gold and silver. We've seen some ups and downs for both of these metals over the last couple of weeks, but overall they are both up since the beginning of the year for sure. So first question, do you see this upward momentum continuing into 2022?
Charlotte, we've seen gold prices strengthen since 2000, along with a couple of other pandemics. But I've been in the business long enough to remember gold trading at under $300 per ounce. And if you go back and step at a larger perspective, gold has been on a continuous upward tear for the last 20 years, 20 plus years, and I don't see the reasons. If anything, the reasons are even compounding and even more so, or even stronger than what they have been in times past. When you look around the world at what's going on, the inflationary pressures, the challenges in Ukraine, it's all adding to why we all need gold.
Yeah, and it is so important to keep that long-term perspective in mind. I remember last year when prices were still historically elevated, people were feeling disappointed. But if you do look back, you can see how far it's come. So you mentioned there's so many things going on right now in the world, and that is definitely true. I wanted to ask what elements you're watching most closely when it comes to gold and silver prices at the moment.
Well, the tragedy in Ukraine is tough not to watch and to feel in terms of the people and what they're going through there. It's it's a real. I half wonder if the world has forgotten what war is, and we're now seeing this right in the streets in Europe, and it's tragic. So it's tough not to do that. That's not why I want gold to outperform. It's for the wrong reasons, but it does highlight what gold provides to people in their investment portfolios. Is a strong, stable source of and measure of value, and in times like this, that stability is a very, very important aspect, and so everyone should have a bit of gold in their portfolio. Inflationary pressures on the other side, let's simplify what inflation is. It just means that you need more of that fiat currency to buy what you were buying for less a year ago, 2 years ago. And I can't help but think that when you sit and look at commodity prices, which is the foundation of everything we consume, and you look at commodity prices all the way from oil and gas to iron ore to nickel to copper to gold to silver, you can't help but believe that inflationary pressures are going to be getting stronger and stronger. And this is in the face of a very challenging economic environment where we're having to adapt. And so probably one of the aspects that I do see around the world is how important it is to make sure that you have your materials sourced from good, stable, strong political jurisdictions. And the world's going to learn what it's like to live without so much product out of Russia and those challenges. And so I just see that as being something that there's a lesson to be learned here in terms of where we source our materials from. At Wheaton, we've been very, very focused on the Americas and Europe, and all of our production comes from good, strong, stable jurisdictions. And I think that's going to undersell how important that is over the next while. So, very interesting times. Again, I think we're in a very good position to sort of not only withstand but to prosper through these times.
Right. And we will come back to, that idea of sourcing supply from stable jurisdictions. Before we go there, I just want to ask, since you mentioned inflation, we have the Fed's next meeting coming up next week. I know lots of people are watching that in addition to what's going on with Russia and Ukraine. Do you have any sense of what we might see there?
It's tough to keep a lid on this inflationary pressure. Literally, again, I go back to the foundation principles. Look at the commodities that form the foundation of everything that society consumes, and look at what they're trading at now, what we're worth. How does that not equate into some serious inflationary concerns? I just can't see how you can keep a lid on this any further.
Right. And so we've been talking about gold and silver. These are metals that Wheaton Precious Metals has exposure to. Let's also discuss palladium, which you have some exposure to as well. That's a metal that Russia is a key producer of. They're the top producer, I think, producing nearly 40% of supply or thereabouts. What do you think this situation means for palladium supply and ultimately prices for the metal?
Well, we've seen how palladium has reacted. When we made the original investment into Stillwater, one of the huge attractions of it was that it was in Montana. It was in North America, a very stable jurisdiction. And you look at the broader palladium market, and one of the things we always assess is what is the political risk behind those other supplies? And we're really seeing the benefit of focusing on that. It's something that we apply to all of our investment decisions. But palladium is an incredibly important material that's going to be even more important as we get more environmentally conscious in this world and try and leave a lighter footprint. Palladium is a part of that. It's required for that. And so the prices that we see, I think we're going to see good continued strength, especially because so much of it does come from jurisdictions. And again, it just goes back to reinforcing each of us should be, really thinking about our own communities, our own countries, our own cultures, and doing what we can to source our own resources from local areas that we're confident in, that we're comfortable with in terms of how those resources are being extracted and delivered and what kind of political climates. And palladium is an excellent example of that. We're of course just also recently invested into Generation Mining and their Marathon project in Ontario, Canada, which is going to produce a lot of palladium. And this is a very good asset. We're very excited about this one going forward. We're actually going to get some platinum and some gold from this asset, but Generation Mining is going to do very well on the palladium side. So excited to be expanding our exposure to the platinum group metals, platinum and palladium over the next while.
Yeah, and with all of these factors in mind, do you have a precious metal that you are most bullish on in 2022?
Well, it's interesting because I am the chair of the World Gold Council, and so I always feel like I'm obligated to say that gold is the favorite. But I've also been known as a long-term silver bug, mainly because silver shares all the attributes that gold does, but it's got a few extra attributes. First off, there's not a lot of it around. It's such a small market, and it's one of the reasons why Wheaton is a precious metals company, is that where we wanted to go, we had to have exposure to gold. But secondly, for everything that we're talking about today in terms of trying to decarbonize and lighten up, silver conducts electricity better than any other metal, better than copper, which is, now obviously it's a lot more expensive than copper, but it doesn't take a lot of silver to improve efficiencies in terms of moving energy or electricity around, whether it's in your mobile phone, which allows you to then have a longer battery life or more processing power, whether it's in solar panels that allow you to actually be net positive in terms of how much power you actually produce from solar panels. The antibacterial qualities of silver exceed everything else. Burn bandages and water filtration systems, silver, it's ever growing. And so more than half of silver is now being consumed in high technology applications. And that just continues to grow and grow. And that's in the face of ever declining silver mining. We haven't seen strong silver production. We reached peak silver probably 4 or 5 years ago, and it's just getting tougher and tougher to find it. I do think that with some of these price moves, and again, silver is generally a byproduct from lead zinc operations and to a lesser extent from copper. Hopefully we start to see some investments in the lead zinc space with these higher commodity prices, and maybe that will start supplying a bit more silver. But I have to be pretty bullish on silver. Gold is such a bigger market though, and it provides such a broad base. And so the entire precious metal space is good, but silver has always been a favorite of mine.
Okay, sounds good. So let's now move on to discussing the company's latest results for 2021. They just came out, so we've got lots to talk about there. Among other highlights, you reported a record annual revenue and operating cash flow. What would you want investors to really hone in on from the results?
Well, I think probably the best thing to highlight is the fact that people talk about portfolio risk and the number of assets, but our portfolio is so strong that even though our largest asset, Salobo, had a very challenging year, we had other assets in the portfolio that more than made up for it. And in fact, we slightly exceeded the midpoint of our guidance in terms of production. So when your largest asset misses as big as Salobo did over the course of the year, and yet you still make your guidance, it really reinforces the strength of the portfolio. And I've heard people comment that we don't have enough assets in our portfolio and need more diversity, but I'd have to say that the portfolio that we've got right now has definitely stepped up to the plate in terms of delivering. But on that note, the other thing I would highlight is how busy we've been in terms of growing that portfolio and the success that we've had, especially compared to our peers. The success that we've had in adding good, high quality precious metals production to our portfolio. In the last 15 months, last 16 months, we've put over $1.4 billion to work on 8 different streams, 7 different assets, 8 different streams that'll ultimately add over 150, well over 150,000 gold equivalent ounces per year of production as these assets come online over the next 3 to 4 years. And so, the growth that we've been able to incorporate in, and I'm proud, like the team in terms of what we've been able to deliver. Our 10-year guidance now has us around 900, the average for the next 10 years, 910,000 ounces. Our current guidance for 2022 is 730,000 ounces of gold equivalent production. And the most of that is gold and silver. It's more than 95% precious metals. But we're climbing organically with the assets we have in our portfolio right now to well over 900,000. In fact, on an individual year basis, there's a few years in the next 10, we're going to be very, very close to 1 million gold equivalent ounces of production, a definite first in the streaming and royalty space. And we just finished our year-end board meetings, and I was joking about the fact we should actually put out 20-year guidance because that's how strong our portfolio is. Now, 10-year guidance is something that we initiated last year because that's how strong our portfolio is. And there's a few of our peers that have followed that, but it's the reason it's not there is because not many companies have good, strong growth over the next 10 years. Our portfolio is very strong.
Yeah, I definitely wanted to touch on the guidance because you did release guidance not just for next year, but for the next 5 years and 10 years, which, as you mentioned, is not super common. So I wanted to ask, especially as you're talking about, making acquisitions, building your portfolio, how aggressive do you have to be to hit those targets that you've laid out?
Well, it's actually, I would say it's a little bit conservative, mainly because Salobo, Vale, the operator at Salobo, has talked about Salobo 4, but they haven't committed to it yet. So we haven't been able to bring any guidance with respect to a 4th phase of expansion at Salobo. But the loose guidance that they had at their investor day and earlier on this year at the investor conference was that Salobo 4 is something that could be up and running by 2028. So that definitely falls within our 10-year framework. And to have that asset climb from climb another, I guess it'll be 33% from where it's at, where it'll be running at after Salobo 3. It will have a definite impact. It's our most significant asset, but to have the growth associated with Salobo, that's probably the biggest upside that's hidden within our portfolio is the opportunity that Salobo 4 represents. And Vale's continued and very strong statement about wanting to grow their base metals exposure, really bodes well for how Salobo is going to move forward. And so that, and the fact that we are still extremely busy at new opportunities, there's no doubt that the services that we provide to development companies in today's world are in demand, and we've seen this just in terms of the number of transactions we've done over the last year and a half. Single asset development companies looking for equity capital to help fund their project development. Much more attractive to do a stream and have us come in and invest into the asset than it is to have to go out and issue shares. Most of those companies are trading at substantive discounts to the net asset value. So it just makes sense. And we've got plenty of examples that actually show that. And so there's hard evidence that supports that. So I don't think we're going to have to, I think those numbers are conservative from a number of different factors.
Okay. And yeah, I did want to ask you about doing deals in an environment where prices are higher. I wondered if there are differences now when you're making deals with companies than there are when, previously we were in a lower price environment.
Well, every purchase we make is a purchase that is being priced based on the spot price or relative to the spot price. We don't use the spot price in our valuation, but but it does reference what kind of a long-term price that we use. And so there's no doubt that we're paying more for gold exposure now than we ever have in the history of the company. but it's because we're such strong believers in gold. Because we're such strong believers in silver. And so, when I look around the world, I do think that there's significant upside potential for precious metals. Again, just with the, sorry, I've got a phone ringing here. Just with the number of opportunities that we have to continue growing that, and when you look at the framework behind gold and the demand, I'm still very, very bullish on that. So that being given, we've, in terms of the rate of return based on the spot price at the time we do a transaction, we haven't changed that approach at all. It's the same approach we've had ever since we started the company back in 2004, and it's delivered very good returns to our shareholders to date, and will continue to.
Okay, so I know that people who follow the company will know that it's protected from many of the risks that affect, your typical mining companies. And one of those right now is inflation. I did want to ask though, because I know you're talking to mining companies all the time, how have you seen inflation impacting companies in this space? Is it an issue for them? What are they doing to combat it? What are you seeing there?
Well, it's a challenge because it's the consumables that are impacting, and so it takes consumables to build a mine, to operate a mine, and we're seeing these costs come up. And oil and gas, all you have to do is look at the increase in oil and gas costs over the last while. That's going to have a direct impact in terms of how mining companies operate. Again, the key focus for us is making sure that we invest into high margin assets, and so they have the capacity. But that being said, we're always trying to find ways to help our partners optimize and improve. And so providing support at the stage, the companies are going into construction, making sure that they have capacity. I can tell you that most of the transactions we've done here recently, they're obviously development projects, and capital cost risk. Inflation it's a real risk in terms of having inflation. Just about every one of those streams, we'd be happy to expand our stream to provide additional support. And so it's nice that these development companies know that they have us in their back pocket if they do need additional capital to help get that construction finished if they are impacted by inflation. So the key thing is making sure that your partners are as inflation proof as possible, and that means making sure they have high operating margins so they can withstand the cost of inflation. And then the other side is just making sure that our own business model and the fact that, one of the huge attractions of the streaming business model and of Wheaton is the fact that our costs are fixed. There's not going to be any cost surprises. So we don't see the inflationary pressure. The only place we see it is the impacts it has on our partners. But because we really focus on high margin partners, they have the capacity to manage that. And so we just have to, it increases it sort of highlights the importance of making sure that this is one of the key aspects of our investment decisions.
Yeah, certainly. Okay, thank you for that. And you mentioned the benefits of this model. I think in recent years, lots of people have realized that, and lots of companies have realized that as well. I think we've talked about before, the space is getting a little bit crowded. So as we're starting to wrap up, I wondered if you could talk a little bit about what investors should look at when they're evaluating this type of company. What are the most important things for them to hone in on?
Well, I think, what we have seen is that, the success that we've had has bred a lot of copycats, a lot of companies that want to move into the space. But to get their foot in the door, what we have seen, and I will say it's improved a bit lately, but what we did see initially a few years ago was a lot of structural weaknesses being incorporated in just to try and get their foot in the door. And they had limited areas of interest or buyout clauses or drop downs or, and those all take away from the value of a stream, the good long-term value of a stream. And so you have to really, if you're assessing the different companies out there, you have to really assess the quality of the structure of the streams. How are those streams set up? And I can assure you that our portfolio is built on good long life of mine transactions where we capture the exploration potential at the end, we capture the expansion potential, and focus on that going forward. The other aspect I would highlight is how important it is. It's our number one criteria is, don't look at the streaming company so much as the partner that's operating the mines the streaming company is focused on, and making sure that they are profitable. Because if they're not profitable, if they're not going to deliver, then the streaming company doesn't get any metal. And so you have to, the aspects that I would say are most important, and it is in terms of how we make our investments, but investors as they assess us should keep that in mind, is that you want to make sure that the portfolio is made up of high margin assets for all the stakeholders, not just for the streaming company. And we've seen this happen a lot where some of the smaller streaming companies have basically gutted the mining projects and taken all the profit out. And then the mining company has challenges and goes into they just don't operate, and then you don't get metal. And so you have to make sure that you have that structure in place. The other side I would say is that if you're focused on precious metals, you should focus on a precious metals streaming company, not a streaming company that has some precious metals and some iron ore and some oil and gas and some base metals. There's lots of good iron ore opportunities if you feel like having iron ore exposure. I can think of at least one here in Canada that does very well in terms of delivering that to you. Oil and gas, there's plenty of options in terms of getting good oil and gas exposure. And so, that diversity, instead of being forced upon you, you can easily mix and match and determine what kind of a diversity you want in your portfolio. If you want precious metals exposure, you should really look at Wheaton.
Okay, so as always, research required, lots of due diligence. As we're wrapping up, I wonder if you have any final thoughts that you would share with our investor audience.
Well, all I can say is just reiterate the company is as strong as it's ever been. The balance sheet is incredibly strong. Our challenge is putting the cash flow back to work and trying to continue growing our company. And our team, our corporate development team, has done an excellent job outperforming everyone in the peer group over the last year and a half. And it still looks very busy. We're expecting to still have a few more new streams announced, new partners announced over the next few months. We're going to continue growing this, but if we can't put it into the ground on good, solid, accretive acquisitions, then we return it to our shareholders. And so, the option, plan B is growing the dividend, and that's not a bad second option when it comes to an investment. So we're in a very good position in today's world, and we like to thank our existing shareholders and welcome all the new shareholders in terms of what we can deliver for them.
Thank you so much for joining me today. Always great to hear from you.
Yes, Charlotte, really enjoyed it. Thank you.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Randy Smallwood with Wheaton Precious Metals.